So tax planning for retirement would be all of our money is in tax-free accounts. Does anybody have all their money in tax-free accounts? Anybody? Bueller? Okay. So that would be a terrific thing, though, wouldn't it? So if we had all our money in tax-free accounts, let's make it really simple. Some folks right now are getting some people this year that are signing up for Social Security at age 70 this year, 2026, are getting over $5,000 per month as an individual. Some married couples this year that are filing at age 70, if they're the same age, they had decent wages under Social Security wages, and they're filing at age 70 in 2026 right now, they're getting $10,000 per month as a couple, getting $120,000 a year this year. It is possible to be in retirement and get $120,000 from Social Security and get it federally tax-free, because it doesn't matter that Illinois doesn't tax Social Security. The federal government can tax Social Security. And what's the maximum amount of your Social Security you can find federally taxed? 85%. Mitch got it first. Ding, ding. You got that? Nah. So yeah, 85%. If you go into retirement with tax-deferred accounts like IRA, 401k, and the rest, you can find that can cause federal taxation on up to 85% of your Social Security. You can find yourself in retirement where you're paying tax on all of your IRA and 401k distributions and those other accounts I mentioned that are tax deferred. And also the taxes on that taxable income can cause federal taxation on up to 85% of your Social Security. Social Security used to be federally tax-free for everybody until what year? 83. Well, that's when the law changed anyway. So yeah. So that was back when President Reagan was in office and Tip O'Neill was Speaker of the House. Back when people used to compromise, President Reagan had Tip O'Neill over, said, come on over. They had a bourbon or a scotch or whatever they had. They shook hands. I think the bourbon got them over the hump. Now, so what they did back then is they changed the full retirement age from 65, and now it's going to 66 and 67 and so on. But they haven't changed it since 83. And then in 1993, when President Clinton was in office, there was another change. So back with President Reagan and Tip O'Neill, they made it to where for certain people that had a certain amount of taxable income, like from IRAs, that certain people could find themselves paying federal income tax on up to 50% of their Social Security. In 1993, under the Clinton administration, they changed it yet again, and they said, okay, certain people can find up to 85% of their Social Security federally taxable in retirement, even if you're not working.